Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, August 9th, 2023. Before we jump into the charts, just want to encourage you, as usual, to please click like if you haven't already. Please become a Wicked Stocks YouTube channel subscriber. Share the content with friends and colleagues. On to the charts. Just a reminder of the big picture. We had a buy signal several months ago above the descending channel top at 179.70 that indicated a good low for the year and eventual upward retracement to the 414.49 November 21 all-time high. That becomes an accelerated objective if we can close above the 296.65 channel top at the end of any week. But until then, that 296.65 formation was considered a 2 to 3 month target. When we closed above 179.70, we reached it in about 4 weeks. We spent 4 weeks testing it, actually pushed through it substantially 4 weeks ago, and then fell off later that week to close negative on the week and below the previous week's low. That was a key reversal high in itself. And so, big picture, if you're talking 2 to 3 months time frame, holding below 296.65 will keep and does allow the channel bottom, which is now in the low 200s, in reach over the next month or two. Now, there is a pivot point inside of that wide zone, and I can show that simply right here on the daily chart. The daily chart. So up here you have the channel top represented by this horizontal line at 296.65, and the channel bottom is 207.93. 207.93 is in reach as a 1 to 2 month possibility, just given the fact, plain and simple, that we tested the channel top at 296.65. Channel dynamics does allow for this market to collapse back. Collapse is probably a strong word, but it has been collapsing back, falling back into the low 200s within a month or two. And if we were, and here's the intermediate pivot point at 248.50, to close below 248.50 today, for instance, then we have a mere 2 to 3 week sell signal to the 207.93 channel bottom, which over the next week and a half or so is converging anyway with that February 217.65 high. And so this is the zone that I would expect within 2 to 3 weeks of closing below 248.50. Until then, 248.50 is still bottom picking territory. It is an area that can contain selling through next week, and above which this market can make another run for that 296.65 longer term channel top on the weekly chart. And that is really kind of the 2 to 3 week time frame in a nutshell. 2 to 3 weeks upside above 248.50 allows 296.65. 2 to 3 weeks downside if we settle below 248.50 signals 207.93. Now for the day itself, let me take a look. This is probably a good image to show. 248.50. I mean, we closed just above that area. We've been slipping below it, but we've not been closing below it. And I do rely on settlement-based buy and sell signals in relation to these important line studies. The rising 1/3 speed line that is 248.50 is, in terms of speed line analysis, trend defining. In other words, the move off that January low, that higher high, higher low dynamic, remains intact above 248.50. But you can also see that that higher high, higher low dynamic still remains intact also above 207.93. So, I'm not going to read too much into it. I will say, once again, that holding above 248.50 will keep 296.65 in reach. I'm just going to say over the next 3 to 5 weeks to keep it simple. On the way up today, 261.36 can contain session strength, possibly through the rest of the week. From there, we could fall back Thursday, Friday to 248.50. We could trade inside this ever-narrowing wedge for the rest of the week. But if we were to close above 261.36, and if you've not been bottom picking the 248.50 level, that is your next sign for being long or going long. And if we close above 261.36, I think by the end of next week, we should reach this 282.25 formation, which can contain weekly buying pressures. We could fall off from there back to 248.50, so forth and so on, which is why I stick more to a 3 to 5 week upside possibility holding above 248.50. Because of these important channel structures on the way up that can contain at least daily, if not weekly, buying pressures. Let's zoom in just a little bit and take a look at the same chart. The high of the low, 253.65, is our intraday pivot point. Below which we can fall back to 248.50, that long-term speed line I showed earlier, and above which 261.36 is likely today. So if we push through 253.65, 261.36 in reach, where a daily high can be placed, and as I mentioned earlier, we may even fall off of here through the rest of the week. Once again, closing above 261.36, good low for the week, good low really into later August, because the next week, I think by the end of next week, 282.25 is likely, and possibly over the next few weeks, a return to that 296.65 long-term channel top on the weekly chart. Now for the downside, sorry about that. Now for the downside, well, I'm just going to go back to showing you and reminding you about 248.50, that if we break or open today below 248.50, 240.94 in reach. Nothing more than a trend line off these lows that did manage to capture Monday's low. It can again contain perhaps Wednesday's low. It is in reach today below 248.50. It's a decent day trade, actually. If we break or open today below 248.50, that sets up for 240.94 as an intraday target where profits can be taken. You may even, if you're an aggressive day trader, go long there, back up to 248.50 perhaps. Breaking, though, 240.94 is a gap closer down to 235.23, and that should be on an intraday basis where we can place a daily low. But once again, if we close today below 248.50, and I will take you back more succinctly, I think, to this chart. Closing today below 248.50. If you're long the market and your time horizon is 3 to 5 days, out to 3 to 5 weeks, which I've just clearly illustrated in this video, I think you want to liquidate either your underlying stock position, the ownership of the stock itself, or any out of the money calls you may have purchased, and in turn either go short the stock into the 207.93 region rising daily, or perhaps buy 210 or 215 out of the money puts that don't expire for at least, I would go at least 3 weeks out on that expiration. The further out you go out in terms of the expiration, yes, the more expensive those out of the money puts are, but the better bang for the buck you get in terms of a better delta response, less theta, less time decay element. And I'll just leave it at that. I think I pretty much summarized it pretty well. I will finish with the 207.93 formation can contain selling through the rest of the year, and above which we can rally right back to that channel top 296.65 and rising within several months of testing 207.93. I don't want to leave that out. That's almost implied, but I just want to mention that in terms of the big picture, through the rest of the year, 207.93 would represent a solid area to buy into through the rest of the year and on to new highs within several months. In other words, on to the channel top once again, that is at 296.65. I think I'm just going to leave you with this image today. This says everything for the upside. I'll be back, of course, tomorrow. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.